If you run your own medical or dental practice or plan to, this episode could save you from catastrophic legal, financial, or cybersecurity headaches. Whilst every doctor knows they need malpractice insurance, most are completely in the dark about what happens when your secretary forgets to follow up with a patient, your server or software gets hacked, or when a staff member sues you.
If you've set out a clinic that's performing treatments, certainly the loss of income might be huge. If your annual income is $2 million, $3 million to that clinic, it's fitted out with a fit out that's $500,000, $1 million. If there's a fire there, you can't operate from there. Actually, for you, that's a huge annual loss. It can cover wages, loss of income, loss of profit. Speak to your insurance broker about how you want to structure that and what works best for you.
Today, we're joined again by Lisa Hiscock, a general insurance broker who's worked in insurance and reinsurance across Australia and internationally. She's seen what happens when doctors overlook the blind spots in their risk strategy, and the consequences aren't pretty. In this episode, we unpack the critical insurance layers beyond professional indemnity, why public liability, practice indemnity, and employment liability matter, real-world examples of payouts that have caught practices off guard, and why cybersecurity insurance is no longer optional.
We see that in the US. Really recently, it just had its first $1 billion payout for a singular patient issue.
1 billion? When it gets to that stage, it's like, how is that even insurable?
It's designed to put the medical practitioner out of business.
If you've ever thought, I'll get to that later, don't. Your entire practice could depend on it. Hi, everyone. Welcome back to another episode of the Investing for Doctors podcast. I'm your host, Dr. B. And today we have Lisa back with us again. Hi, Lisa.
Hi, it's good to be back.
All right. Now, before we start, give us the quick intro about yourself and we'll get into it.
Yeah, so I'm Lisa Hiscock. I own Hakea Insurance Brokers, and that is a general insurance broking service. But previously in my career, I have worked in reinsurance and insurance in various different roles, including the reinsurance in the casualty space, which includes professional indemnity, public liability covers, and medical malpractice.
Awesome. Welcome back.
Thanks.
Yeah. Now, before we get into the topic for today, just, explain to our viewers what general insurance is again, and so that, we know what we're actually talking about. Yeah.
So general insurance usually refers to your day-to-day insurances for property, businesses, public liability, anything in that space, as well as some other insurances like residential landlord, your homeowners policies.
So we're insuring everything but the person.
Yes. And then life insurance is a very different sector.
Yeah. And I think you previously mentioned there's a dark art to that.
Yeah.
In its own right. All right. So, I guess today's episode, we would really love to have a chat about, the kind of insurances that as a medical or dental professional you really need. And that goes from, the malpractice side to, if you're a practice owner, you want to look at your practice indemnity and go from there.
Yeah.
How's that?
Yeah,
all right.
Sounds good.
So let's start off with what the insurer sort of ecosystem looks like in Australia, because I think that's one thing that a lot of people understand bits and pieces of it, and I'll give you my sort of brief understanding. So my understanding is that in Australia, we have 4 sort of, membership sort of insurers or mutual insurers. They're basically Avant, MDA National, MEGA, and MIPS, the 4 of them. Plus, in the medical space, we have TIGO, which is the 5th one, which they're not a members-based organization. They're more of like a for-profit organization. Now, that's the dental space, and there is some overlap with that's the medical space, and we have some overlap with the dental space as well, because my understanding is that MIPS and MDA National are also involved in the dentistry space from a members organization, even though most of the members in those 2 organizations are doctors and not dentists.
Yeah.
But then in the dental space, we have Guild Insurance, which is also a for-profit organization.
Again, private insurer, yes.
Yeah, it's a private insurer. And, Guild, obviously, as the name suggests, is part of the pharmacy guild, and they insure pharmacists, allied health professionals, and all of that stuff from the malpractice umbrella. Yeah. Is that sort of rough?
Yeah, it is. And I think one of the main things is that the medical four associations that you mentioned and TIGO tend to be quite monolithic. So they only have they look at the indemnity for medical professionals, whereas when you start looking at Guild, for example, they have other lines of businesses as well. So they are also in the general insurance space.
Yeah, and they do lots of other different kinds of policies.
Yeah, so they're a much bigger organisation, a much bigger company, whereas the other mutuals you spoke of are much more focused and a doctor-led usually, or very much heavily doctor influenced by who sits on their board and who's in their leadership panels as to the services that they're providing.
Yeah, and I think previously we spoke about how the insurance risk is spread across various policyholders. I guess in the medical indemnity space, it's also there's specific ways of holding that risk across that profession. And I think the most common one is by specialty.
Yes.
Say your risk as a cardiologist is going to be very different from a risk of say an obstetrician, for instance.
And you find that some mutuals or some organisations will end up being the holder of all the obstetricians because they're the ones that have the appetite for that particular specialty.
Yeah, and in a way they also price that differently, isn't it?
Yeah.
I personally use MEGA, for instance, and I remember when I had to increase my cover for private billings, they basically asked me, it's like, oh, are you an obstetrician? Nope. Are you a neurosurgeon? Nope. Do you practice cosmetics? And I was like, nope. And then we say, okay, then you get the standard rate. Yeah. I mean, is that how it works in that sort of malpractice space? You have some high risk professions, and then you have
absolutely, and we'll probably touch a little bit on why. And I know what you did on the last one of our last conversations, but a lot of it comes from the severity of the outcome. So if something goes wrong for an obstetrician, you're looking at quite often a birth injury. That's usually a very long-term and potentially very severe outcome for what's a very young person. So when we look at those kind of incidents from a claims valuation point of view, they're the claims that are most likely to run into the multi-million-dollar sort of loss event because you're taking someone who is at the start of their life and they might need lifelong care. That person who's been injured at birth might still live to their 60, 70 years old. They might need 24-hour care 7 days a week. All those kind of things will really stack up in terms of a severity of loss versus, potentially other specialties where you're either dealing with perhaps older people and if there is something that goes wrong, their prognosis for how long they were going to live is much shorter.
Yeah. So it's almost like as an insurer, and this sounds really horrible, it's like if the patient dies, there's less payout than if someone who lives in disability for a long time.
Exactly. Yeah. And actually there's a whole rating system called Ogden rates that you can look up. That's a kind of rating system that is used by actuaries within the insurance sector to kind of look at some of those outcomes. Yeah.
And is that like a scale where how much is worth something, or the cost of that disability, or is that
just the severity and when you take into account all the costs plus inflation. So you think about a birth injury today, you've also then got to take into account if that person lives for 60 or 70 years, the cost of inflation every single year to provide that care, to perhaps provide that specialist accommodation, to provide an income for that person to live if they can't work. That's also going to need to be multiplied by inflation and an inflation prediction. Versus someone who's 70 or 80 and they get injured and perhaps their outlook for how long they were going to live is 5 or 10 years. Depending on if they're chronic illness.
And, sometimes they already had the chronic illness to begin with. So it's also like a shared, not shared blame, but like, you already had the chronic illness. We tried to do something. You didn't get the best outcome, but you still had the chronic illness to begin and you still had it with it afterwards.
Yes.
Yeah. So the way that's being assessed is very different. Yes. And so that's why perhaps in obstetrics, that's one of the highest indemnified professions, I guess.
Absolutely. Yes.
Yeah. Because you're not just looking at the mother, you're also looking at the baby as well.
Yeah, absolutely. And the long-term nature. The
long-term consequences.
And usually mothers are not, particularly necessarily old, or they haven't got, they're not coming to you with a chronic problem where there's any kind of mitigating circumstance as to whether they might have. But usually, the majority, not so. Those aren't usually factors that are going into it in every single case. So you'll see a lot of them where they came in potentially fit. And
I guess that's similar in, say, cosmetics. You're basically someone who's completely well and you screw up and they end up completely disfigured, for instance. And that ends up a lot of pain and suffering.
And I think with cosmetics as well, there's still an element to a lot of procedures and things that are perhaps maybe more innovative than some of the things we're doing in other areas or the other areas of medicine. Certainly cosmetics seems to have a lot more emerging risk. And including, we spoke about using procedures and drugs that were intended or designed for
something else,
one thing and then used for something else. We see that a lot more perhaps in cosmetics than we see in other areas as well.
Because you're trying to improve someone's aesthetics in a way rather than fixing a existing disease or a disfigurement in a way. And lastly, why neurosurgery? I guess that's another one where you have really bad. I guess we've used your framework. Bad outcomes, the severity of bad outcomes. That's another area where it's huge.
It's likely to be every case is very complex as well. There's no straightforward case. There's not an easy record of cases either because each case is very different and so unique. It's not, if you looked at say a specialist that's a mole clinic that's looking at skin samples. Cancer, a lot of the samples they would have would follow a certain pattern. There would be a number of results that would come back that would be benign, all of those kind of things. I think most of the time, if a patient's gone to a neurosurgeon and they're going to result in a treatment, it's typically there's not a typical cycle for it, and there's not.
And based on the location of the, I guess we're talking about brain tumors. Based on location of the brain tumor, the symptoms that you present with or the disability that they end up having is completely different, and so it's not standardized. Like, oh, okay, you missed this one, you get you have to go for chemo, or you pass away because they missed a melanoma, for instance. That's a very predictable outcome, whereas this is less predictable, and so it's more costly. Is that factor in there?
It is, and also the likelihood that there's going to be a case brought against you as a medical professional. So perhaps if I explain that a bit, better in terms of with say a skin clinic that's seeing a regular influx of customers or of patients, and they're all having very much the same procedure done, and it's being sent to the same clinic for the same tests, and those test results coming back, and you're making decisions on, what ends up being, have a frequent pattern.
It's quite standardized in a way.
In a way, and it's again, you mentioned it earlier. It would take, you miss a melanoma, like rather than getting, there being a high risk part of that procedure in the first place. It's more error and omission. You either misjudged what something was, or you didn't make the right calculation in the first place. Whereas again, with high risk, very technical surgeries, the outcome, you might be going in is always going to be. So there's a lot of subjectiveness into the outcomes, and when there's subjectiveness and the lack of objectivity, the risk of litigation goes up. And that's really what drives that extra cost, isn't it? Because you can't defend it by comparing it to another case. Well,
because there's really not that many similar cases.
And there's not a similarity of process, so it becomes much more vulnerable to
to extremes. Okay. Now that's very interesting. And I guess, from a for-profit versus a members-based organization, you have to decide where your values lie in choosing one or the other. But interestingly, in Australia, the medical indemnity system works such that you can still be indemnified no matter how bad of a clinician you are. You just have to pay a lot of money. Because each one of the four mutuals are insure of last resort in respective territories. And I think that's a hangover from a legacy thing. Whereas a for-profit company can say, no, I don't want your business.
Yeah, I think part of that is that there's a reliance on, the medical institution itself to regulate itself. So if a doctor is allowed to practice with a license, the assumption, is that they're competent. And if they have their license taken away, then that's the point where they become ineligible for insurance because then they're not, competent at practicing.
Yeah, I guess so. I never thought about it
rather than
way.
having, otherwise the insurers deciding who's allowed to practice or not. And that's quite dangerous in itself. That should be down to the medical institutions to be able to decide who's practicing or not a financial institution.
Yeah, because that's different from, say, if you're investing a house, right? You can just say, no, that's too high risk. We're not going to invest it. You can choose whether you want to live in it or not, and whether you want to own that property or not. But you can't really do that in the medical profession, which is interesting.
No, and it would also mean that there are certain professions that then might become uninsurable that we really need as a society. So there's almost needs to be some safeguard there to make sure that, all areas and all specialties are actually insurable.
Yeah, because I mean, there are, for instance, I've just used the example of surgeons, for example. There are surgeons who perform very high risk operations, and there's ones that choose not to perform high risk operations. And you can't just say, because the person who's doing all the high risk operations shouldn't be insured or are uninsurable now, when they are probably still needed.
And that can become prohibitive to innovation.
Yeah.
If it's that the person that's always doing the high risk, or the ones, let's say, from a being claimed against point of view as a doctor, if you're taking more risk, you're potentially innovating more. You might be using new technology that's not been used before. That's a really important part of development in any area of society, but particularly medicine. If that's, if the case is that they can't obtain insurance or they can't operate, then it's going to really dampen the capability for there to be innovation within the medical industry.
Yeah, that's
because it's going to create fear.
Point.
We see that in the US.
Yeah.
The US has cited that a number of times as being a challenge to innovation, is the litigation environment that they operate in. They will use processes that are 40, 50 years old over emerging, potentially, practices that have better outcomes, because the fear of innovation is so high. Because again, a lot of the claims come in, what's the procedure you've used? Can we compare it to 100 other cases?
Yeah. Yeah.
Is it the norm? Is it normal?
I mean, look, I think the US medical malpractice system is like, I'm not going to say completely broken, but it's like very broken.
Oh, it's in its first, really recently, it just had its first $1 billion payout for a singular patient issue.
1 billion?
1 billion, a court.
For what?
That again, I think that was a birth injury, that one. But we've seen, particularly in some of the southern states, for example, Missouri, some of the court-ordered payouts are in the hundreds of millions.
How is that? I mean, like when it gets to that stage, it's like, how is that even insurable? I mean, in a way.
So it's not. It's designed to put the medical practitioner out of business.
Yeah. Okay. And then what happens? I mean, nobody has that amount of liability in a way. I mean, look, I think now that you mentioned that, I think in Australia, we are a very much less litigious country, which is good. But also the government actually puts rules and safeguards around these things. So I think for the listeners out there, if you actually look at your indemnity, it's always up to $20 million. And thankfully in Australia, once it hits $20 million, the government picks up every cent of that.
Yeah, it's capped.
And it's capped at $20 million. I mean, it's not capped in terms of you can't go over that, but it's capped in terms of the government will take on all of the liability. So if it was $100 million, then the government will take $80 million and pay out. And I think even under $20 million, the government will also pay a large portion of it.
Yes, that's correct.
Yeah. So, thankfully we have the government to put a stopgap on that.
And that really keeps the level of claims at the severity of those payouts at a point that's manageable and not hindering the medical
progress.
Industry from operating.
Yeah. I think that's a very thing that we have to be thankful for being in Australia. And I think I've seen some really high indemnities, but they're still in the six figures. I think I've seen some six-figure indemnity fees.
But in turn, it's keeping the industry affordable.
Yeah.
So one of the key reasons why like medical care in the US isn't affordable and the insurance premiums are so high is to do with the suing culture and the level of those claims.
Okay. So thank God we're in Australia then. Yeah. I think that's the malpractice side, which is always an interesting topic to broach on. But, let's get into the other things which people don't often consider, because as a doctor, you have to have medical indemnity. That's no questions asked. You have to have it as part of your registration. Yeah. Now, the other part is with practice indemnity. Now, a lot of us will practice either publicly or privately. In the public system, that's taken care of by the hospital.
Yeah.
But obviously, in the private system, you're not. So, I think one of the topics that we should talk about is practice indemnity and where does that come in.
Yeah, so that's one of the most common points I will talk to a doctor is when they are starting their own private practice. And again, a common area is, practice indemnity, when to purchase that and, what to expect from it. Practice indemnity is provided by some of the providers we mentioned already, the mutuals, but it's also provided by a number of private insurers in Australia as well. So there are, plenty of options as to where to get cover. Usually, again, depending on, individual circumstances, it's quite an affordable cover at the point where it's a small organisation. So if it's one private practitioner that's going out that's perhaps hired 2 members of staff or something like that, it's usually a small cost when you look at the grand scheme of setting up a private practice. And it covers for those professional items of just running the practice. So if, examples would be issues with booking systems, if a follow-up's missed or a test result isn't sent to a client because it's been missed by a member of staff on reception, those are the kind of items that are followed up.
Are covered by the practice indemnity.
Yes.
So in a way, let's just workshop this with an example. So say I'm a rheumatologist and I've just set up my own private rooms. I have a secretary and a practice manager, really, and I'm doing this, say, 3 days a week. I obviously have my own medical indemnity, but I would like to purchase a practice indemnity as well. And so that practice indemnity will cover the things outside of what my medical indemnity will cover, right? And so that would be, as you said, the staff missing things or not booking in patients. What else does that cover?
So it's the running of the professional services of the practice. So when it's a small operation like that, those kind of things can escalate. If that appointment wasn't rebooked and that appointment was due to deliver a test result that was going to say that person needed urgent treatment, actually that's not a medical indemnity issue. It's not a medical malpractice issue because you as the doctor haven't misdiagnosed that patient, but they've had a poor outcome and they may have end up getting treatment much later because the appointment wasn't booked. You were due to book that follow-up appointment or you were due to release a test result or the receptionist was due to call them back due to that test result that's come in. That's the part that's been missed. Actually that outcome could still be horrendous if that was meant to be, a treatment plan that needed to get started very quickly and it didn't. Those are the kind of things where if missed, that can be a large claim, but it's not going to be necessarily covered by your medical indemnity because it wasn't a misdiagnosis. It was a practice issue.
Yeah.
So with practice indemnity as well, quite often a number of the providers provide public liability cover as an extension to that cover. Public liability is, of course, really important for anyone that's operating a particularly public space. The second you invite someone in, they are at risk of either injuring themselves or maybe property damage to whatever they bring with them. And therefore that covers also very important to have.
And that's relatively cheap item, isn't it?
Yeah. Both those, for the kind of practice that you've just mentioned, both those items are low cost in comparison to the overall cost of starting a practice. They're very low cost. And again, are definitely there to support your business when something does happen.
Yeah.
You've got...
And I guess the question is like, when does, if you're a individual practitioner, when does that risk lie on your individual? Because, I've seen arguments where the individual appointment wasn't booked, or the clinician missed it and that something didn't happen. The clinician's also responsible in a way when something does go wrong. So they might end up getting named versus the practice. Where, can you choose which one to pick up that tab, or is this something that whoever is litigating would be the one doing
Yes,
that?
it's a very grey area in a lot of ones. What you don't want to be is in a circumstance where it could have been one policy or the other, but you didn't buy the other policy. If it's one policy or the other, but you've got both policies, you kind of handing that issue of whose responsibility it is over to the insurers. Whereas if you don't get a policy and it could potentially be on that one, then you're personally needing to argue that case. Versus it being between
can
the
I
insurers.
say, okay, like I'm a solo practitioner and oops, I didn't get my practice indemnity, so I will put it under my personal indemnity. Is that?
It was something that I would.
You don't want to test
You're talking to someone who's quite risk averse, so I wouldn't want to be in that position when the incident occurred. I would always prefer to have the policy in place. A great thing you can do is, particularly with the mutuals, they're very
just have a chat.
A chat, ask. And that's something that I can't advise on because I don't know the individual bells and whistles of all the medical indemnity providers. Some of them may offer it as an extension if they know you're a sole practitioner. I don't know that they do, but that's definitely something. Pick up the phone and ask and find out.
I think if you're a solo doctor working in your own practice and you don't know that answer, you probably want to, reach out to your indemnity provider and find out. Yeah. And that's very interesting.
And it might be an additional premium. It might be something that you can actually get an extension on that policy for.
Yeah.
So it's always worth asking the question. And if it's no, then that's also a good scenario because now you know what you're not covered for.
Yeah. And this is one of the great things I like about having these sessions is that you find out what the unknown unknowns, right?
Yeah.
It's the blind spot and where they are. So, obviously that's a quite a simple structure. I guess once you're a much bigger practice and, you're having 4 doctors, a nurse and 3 other staff, that's vital, isn't it? There's
absolutely
there's
vital.
no argument.
And further to that, then you'd want to look at management liability as well. So you've got cover for employment practices. If you have any staff members that have, make allegations about the way that things are done in the practice or against, sort of behaviour, those kind of things. Management liability policy that extends to those covers can also be important.
Yeah, and what are those horrible examples of when things go wrong? I mean, you would have come across some of these situations when it comes time to claim. Yeah, like what happens if you didn't have management liability, for instance?
So perhaps a claim of like abuse claims would be one. So the abuse of staff, an allegation of abuse is made against you as the practice manager or the doctor. It's unfounded. That person's looking for compensation. They want their salary covered. They want this and that. There's also, obviously the containing the situation because there's a risk to your reputation ultimately when something like that happens. That's the kind of time where you want an indemnity policy that you can rely on in order to have not just the kind of finance side of that covered, but also the expertise of a claims team that are used to handling those kind of issues that can manage the situation and pull it out of, take it.
And what kind of cover is that called? So
that would come, you can get that under the employment practices liability cover.
Okay, so it's from employment
issues
perspective.
So when you're a much bigger practice and you've got lots of employees. And I mean, you could get it with one employee, I suppose, as well, but yeah. You asked me some of the incidences, and that's one of that definitely comes to mind.
Yeah, because they're dealing with people. That's half the it's half a battle.
Yes.
Yeah. Okay. So so that's outside of the practice indemnity. That's like employment.
Management liability covers, and you start looking at that.
And then obviously, as a there's also, if you're a director for the company, there's also that director cover,
directors and officers cover. Yeah.
And what other covers that we haven't touched on for, say, a reasonably sized medical practice or dental practice?
So if it's a privately owned one, we also need to talk about the property that's owned within the practice. That's an obvious one to move to. If you set your clinic up and you've got a number of like skin laser machines and heavy equipment and whatever dental else chairs, it might be, dental chairs, big one. Then commercial fit outs for surgeries, particularly when you start getting larger ones, can start getting up to $500,000, $1 million plus. Depending on what equipment that you've fitted that out with, that of course needs just
the contents
insurance, property insurance if you own the building as well, and then your loss of income. So what happens if that premise burns down and you can no longer have your patients at that clinic, and that particularly if they were coming for a specialist item, it's not so difficult if you're a specialist and you've just organised an office and you're just consulting there and you're doing your treatments at a hospital on another site. You can probably find a backup office space relatively quickly and get restarted. But if you've set out a clinic that's performing treatments, certainly the loss of income might be huge. If your annual income is $2 million, $3 million to that clinic, it's fitted out with a fit out that's $500,000, $1 million. If there's a fire there and you can't operate from there. Actually, for you, that's an annual, huge annual loss.
Especially if you got employees that you still have to pay for and all of that.
Yeah, you're still contractually obliged to pay your staff. So you can cover wages, loss of income, loss of profit, depending on how speak to your insurance broker about how you want to structure that and what works best for you.
And what is that cover called?
So that would just be either it might be under a business pack insurance cover, and that would be where you select the covers that you require for the running of your particular business, your practice.
And this is where the services of a broker really shines, isn't it? It's just to help you find the unknown areas that you
absolutely
not even sure you knew you could get insurance for.
Yeah, and even down to some of the details in terms of if you wanted to speak about things like the indemnity period. So if your particular clinic was to experience a physical damage loss, so let's say that fire loss again, would it take 12 months to rebuild it? Would it take 18 months? Would it take 24 months? How long did it take you to source that machinery and have it delivered? Because I know for some specialist equipment, the wait list,
6 months wait list.
Yeah. So ultimately, you're going to need your loss of income covered for at least that wait list plus potentially
whatever.
Longer.
Yeah. So I guess in that commercial space or business space, you can tailor a product for anything, for most things that you would need, isn't it?
And things like glass as well, machinery breakdown cover. You can buy that, you can purchase that as a cover as well. So that will cover for the mechanical breakdown.
I guess if there's a risk, someone will cover it if the price is right.
To a degree,
Okay. All right. So now the last thing I think we want to touch on, which I think is a emerging threat and risk, is one of cybersecurity. We've all seen the various hacks that have gone through. Qantas was a recent one. Then there's also, I think, Medibank was hit one. Genia was a fertility company that was hit by it as well. That's really becoming an emerging threat, isn't it?
It's emerged, definitely.
Well, not emerging anymore. It's like emerged.
It's definitely happened. We've had a lot of incidents, as you mentioned. Yes, certainly. And it's something that you can buy an insurance policy for. And it's the one that I recommend most frequently in terms of a cover that wasn't bought last year by a private practitioner or private practice, that I would always recommend purchasing for the year coming. Because ultimately, it's not just, we see the headline cases. So Medibank, I think they were also, not only did they have the cyber loss, so they lost their clients' details, they had to pay compensation to the clients that had lost their details. They had to pay, obviously, to sort out their systems to make them so that they weren't vulnerable to a further attack or a later attack. But they also had to pay a fine. So they were fined by the Australian government for mismanaging the data or not having those protections in place in the first place. And when we start talking about sensitive data, and let's face it, if you've got medical data on someone, it's always going to be classified as sensitive. There's no way it can't be. Those fines are getting really serious. And the consequences are getting more serious for not putting those protections in place.
Yeah.
So cyber insurance policy is obviously not providing the protection in the first place, but it can, the questions normally asked in the application lead you to know whether you've got the sufficient, sort of safety guards in place, whether you've got, multi-factor logins, whether you're using defense software on your computer against attacks, those kind of things. Though it's quite leading with that, but the actual insurance policy itself will cover things like emergency response. So having, if your files are encrypted and they're being held for ransom.
That's a usual ransomware attack.
Attack. What do? Can you open your practice that day? You can't access your patient files. You've got to tell your patients can't access your files because there's a ransomware on them. And you've got your patient list, but you've also now got to sort out this IT issue. The idea of the response of a lot of cyber insurance policies will be that they will have specialist responders that will be able to come and they will negotiate with whoever's holding you to ransom. They'll work out whether it's worth negotiating with them or whether it's worth approaching it from a different perspective. A lot of the policies also have optional extensions as well for items like, handling the media. If you're getting negative feedback, you've lost lots of patient records. What kind of, you're a sexual health clinic that's lost loads of patients' records. Those are the kind of things where media response might need to be pretty prompt. Those are the kind of items, and also your loss of income. So sometimes if that ransomware attack happens, for example, and you can't access your computer systems and your files for 10, 20 days, you might have to shut your practice for that amount of time while that's being sorted out. There's a loss of income there as well.
Yeah. So I see that what it really covers is, again, the loss of income, the response. I mean, a lot of these covers is really about the response and how much you need to pay to mitigate that attack or risk in the first place.
And it's not just pay, it's actually getting hold of the right people at the right time.
Yeah.
Because the last thing you want is that a situation to happen and then you're on ChatGPT asking, what do I do?
So that's a great question. So, do the insurers have a specific team or set of people that they know are the experts in that?
So the leading cyber insurers in Australia have retainers for the for responders that are experts in the areas where they provide the insurance policies.
And I'm just going to go into a bit of nitty gritty now. This used to be a huge problem when medical software was run off local servers because you had to manage the local server. And if someone breached that local server, then you're in all kinds of pain. With now a lot of our software is being on the cloud, through third-party software providers. We never get to see the server. So what happens when they get breached, but then it is the data from our practices that are exposed. What happens in that situation? Who is the ultimate responsible party to those kind of attacks?
There are two questions though there. There's who's responsible is one thing, but in the moment,
it's
where's the impact?
The pain is definitely say I use a cloud-based software. I have no control over the security of that from their server side and their service side. I mean, obviously, if one of my either employees or contractors gave out their login and then they logged in and then someone decided to go in every single record and steal all the record and then release it. Yeah, obviously that's that entry point is from my employee and my practice or perspective. But say the hacker then hacked into that system, which I'm paying them good money to run a secure system. Obviously, when the data goes to create, it's still going to create pain for me.
Yeah.
But is that my responsibility, or
It's not whether. I mean, it's whether at that time, regardless of whose responsibility it is, you're going to want to mitigate the loss.
Yes,
you're going to want to
shrink
that loss of data to as small as possible. So if there's anything that you can do on your end to stop that data leaking and stop that data. If there's anything you can do, or stop adding to it.
And what if, I mean, yes, I get that, but what if I actually have no control over that because I don't
The control starts with who you choose, I suppose, that as your service provider.
Yeah.
And some service providers will advertise themselves as having better cybersecurity than others, potentially. So service selection is always one. I think I'm always curious now. We use a lot of other services outside of just the cloud where we're storing the data. You've got note-taking. A lot of particularly general practitioners now use note-taking.
Yeah, use the Scribe. Yeah,
there's Scribe. And not only that, there's the Scribe's now AI. It's learning. It's putting together the letter, the referral letters and whatever else they're going to go out. So it's got actionable. At some point that gets stored on the cloud, but there's another provider there as well. And that's also listening and doing something.
There's a lot of different software we interact with. So it's not just your medical record system, but it's also, the booking system. For example, you're using either Health Engine or Hotdog or AutoMed to booking your patients. Your healthcare data is on so many different platforms now. And to be honest, most of that is not at the individual practice control or the individual clinician's control. It's somewhere else. And when those guys get breached, I mean, I'm looking at this from an angle of if the government comes down and slaps a fine on you, who are they fining? Are they fining the software provider, or are they fining the practitioner whose data that belong to?
Yeah. I mean, it would be the person in the chain who's sort of dropped the ball, I suppose, instead of their responsibilities. Yeah. So if you've done everything you possibly can and you're up to date with the advised levels of security, you're unlikely perhaps to get a fine. The fines are usually there as a penalty for behaviour. We're kind of hyper-focusing a little bit on sensitive data, and we're not thinking about things like invoicing. So, a lot of the hacks are focused on changing, amending invoices. So if you're sending invoices, not even just for patients, you might not invoice your patients, they might pay as they use a service or whatever else like that. But you might be invoicing third-party providers, how you pay your staff, anything like that could also potentially be intercepted and changed. And then your money's being paid to the wrong person. Yeah. So if you pay a large contractor that provides all of your medical equipment that you use in your day-to-day or your stock, essentially, if that gets intercepted and you end up paying that $100,000 bill to
a random person
because the invoice got intercepted and you weren't aware.
Oh, wow. Okay.
Yeah. Or you're invoicing someone else for a service and it gets intercepted from your end.
Yeah.
And then you don't get paid because they ended up paying someone else.
Yeah. I mean, that's a whole nother can of worms, isn't it? And so I guess cybersecurity covers all of those things.
So cyber insurance would certainly, has the potential to cover those kind of incidences. Yeah. And also so a number of insurers also now provide pre-incident funds, is what they call it, or pre-incident services, where they'll actually be able to provide a service to the business where they'll look at these things in terms of how you can improve your security. Yeah,
that was going to be my next point. It's like, isn't prevention better than cure? And it's like, who can you go out to access these services so you don't even have that risk? Because I know a lot of practices are running on very archaic systems. And, some of them might be as simple as downloading the wrong update, which is, has a virus attached to it, and they update it and something goes wrong. Yeah. Their entire server is taken offline. Yeah. We've seen those stories.
Yeah. Yeah. And we're moving more into areas like telehealth as well. Yeah. And there's more kind of, telehealth is quite a common option for a number of, particularly again, general practitioners from the clients that I see. And that's becoming a more common way of communicating with our clients. And how do we keep that a safe platform?
We see a lot of these big vendors getting hit with security breaches. And I guess they are sort of nicer targets to go for But small practices also do get hit every now and then.
Absolutely. Small practices are definitely a target. And that's not unique to the medical industry either. It's across every single industry.
Accounting firms, law firms are all getting hit.
And it's because sometimes that, like as you mentioned, they're using archaic systems. They're just an easier target because they haven't upgraded the instruments that they're working from. And that makes them a more vulnerable and easier target.
Yeah. Well, I mean, after this conversation, I feel like I need to get a cybersecurity expert to come and have a chat with us on the program. But yeah, I mean, any take-home messages for someone running a medical practice, apart from get cybersecurity?
Talk to an insurance broker about cyber insurance, definitely. But if you're in private practitioner and you're in charge of your own practice, definitely.
And it's good to get that reviewed.
It's definitely, even if you're just having the conversation and just seeing if it's something, again, like I said, if you go to an insurance broker, you can get a quote. You're not obliged to purchase the policy, so you can actually find out how much it's going to cost you before you have to make any decisions to take it out. And I've seen insurance premiums in the cyber insurance space for small practices can start from as little as sort of like $1,000, $1,500 a year. It doesn't need to be necessarily a huge expense. So for some of those smaller practices, and it might give a bit of peace of mind.
Yeah. Awesome. Very lovely to have you back on the show again. And
thank you.
Thank you for teaching me a thing or two.
No, thank you. It's been really good.
This podcast is for educational and entertainment purposes only. The information and opinions shared are not intended as personal financial advice. The content presented should not be relied upon for making financial, investment, or other decisions. Listeners are strongly encouraged to seek the advice of qualified financial or legal professionals before making any financial decisions. While we aim to provide valuable and accurate information, we make no guarantees regarding the completeness or accuracy of the content. Any reliance on the information provided is done at your own risk.